Can you see my screen?
Yes, we can see your screen, sir.
See chat or more.
You guys want to kill me? He said switch chat. Excuse me, let me do this.
Section did actually amount to your screen itself. Or more.
Hmm. You don't see my chat anymore.
Yeah, no. Yeah, I can see your chat.
Excuse me, give me 1 minute. Okay? 1 minute. I'm coming. Okay. All right. All right. So let's go. Okay. Can you see my screen now?
Yes.
Yes, we can see it, sir.
Okay. Honestly, taking trades on the 1 minute is not something that is made for me. Okay. I do respect Sir Bradley a lot because the trade on the 1 minute takes uh, a lot of discipline, knowledge. Uh, you need to restructure because you have to restructure, understand structure on the 1 hour time frame, understand structure on the 15-minute time frame, and understand structure from the 30-minute time frame. What I actually do is to read structure, like to stay on the 4 hour time frame and the 1 hour time frame. And I'm just going to take trades from the 1 hour zones, 15-minute zones, and 30-minute zones, or 4 hour zones. Not under that. Okay, I'm not going to take trades on the 5-minute zones. And again, the aim is to make money. Boss Briley taught Sir Frank how to trade, but Sir Frank had his own vision of the market and is making money from that. So you need to have your own vision of the market. Is can you turn on your mic? Can you of the market which you feel comfortable with. So the aim is to make money, and there is something I just want to share with you that you don't need to trade multiple pays. You don't need to take multiple trades in a week, just in 5 minutes. So let's say that from 25 July to 31 July, to just 1 week, to 30 July. So here is from here last week started um, um, yeah, from here, from here, yeah. Okay, the week started here. Now the week ended on 30 July. Okay, do you hear me?
Please, can you make your screen to be full? Is it possible?
What?
Can you make your screen like make it to be full, like maximize your trading view?
Okay.
Yeah,
Um,
let's see.
can you see my full screen now? Hmm?
It's, it's almost the same thing, Sha, but then it's cool. It's fine.
Can you see this? Can you see the full screen?
Yeah, it's better now. It's better.
Okay. So that being said, this is in 1 week. Okay, in 1 week. These things. This is the 1 hour time frame, and this is just in 1 week. And in this week, when the week starts right here on Monday, I only trade 2 sessions, and I'm not going to explain when this session starts, when this session ends. I'm not going to explain that. But I only trade 2 sessions, which is New York sessions and London session. I don't trade Asian sessions. So price started right here during Asian sessions and rallied up right here and broke this structure. Okay, broke this structure. So you think that an uptrend, like in textbook, this is what you see. Are you high, high, low? 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 This is the characteristic of an uptrend. But actually, this is not how it looks. Okay, this is just bullshit. And this is not something you will see on the chart. What you will see is something like this. Price, there will be a major move. Okay, there will be a major move up. And you will see something like this. Create liquidity to confuse people, and price will create something like this, and then break structure. Create take liquidity right here, and price would do something like this again. Create liquidity sometimes. Um, for hour you will make money, but if you come on the 1 hour or if you come on a 15-minute time frame, you will lose money. Or 3-minute time frame is bullshit. You can't trace upon resistance on the 3 minute. Okay, 1 hour daily, you will make a lot of money. So price will just tap here, create liquidity. Sometimes try to create higher lows and higher highs. There is a demon sitting here. Price will just tap into this demon zone and take you as liquidity. So you need to restructure on this globality and not just stay on your 15-minute time frame and try to say that this is uptrend or this is downtrend. Because the overall right now is uptrend because the dollar is really weak right now. So when the dollar is weak, AU, EU, and GU will kind of rally up. Okay. So as Monday, price rallied up right here, and if I see, I'm not seeing a clear demand zones that push this price to rally up. But when I look at here, I have this imbalance that was created right here. See this candle, this candle have this candle that was created as imbalance to other block here because price comes to fill imbalance, and when you see price when there is imbalance like this, there is others sitting above. When price feels imbalance, price is kind of tapping in this other block to fill this others, and have ice, okay, as price rally up from a demand zone. I'll draw this demand zone right here and refine it on the 15-minute time frame. Then I'll patiently wait for price to tap in here. But if by dropping, price creates something like this. In my mind, I know that this is not a downtrend. In my mind, I know this is not a downtrend. Okay, I know this is not a downtrend. I know that for me to be for this market to turn a downtrend, we need to break this low right here. Because on this 1 hour, this is the recent low right here. So if you break this, I wait for pullback to buy. But we didn't break this, so all these bullshits are nothing but liquidity being created for market to take this. Because some people are going to sell right here, block structure, return to other block. They sell, they don't take profit. And they keep selling. So beautiful liquidity being created right here. Market tap in the fill this imbalance, tap into this other block and rally up. So this is how I read structure, honestly. So now that price tap here, I'll go on the 15-minute time frame and see how it play out. So let's say that you trade only this pair and you have, let's say, 5,000 account. Okay, 5,000 account. The minimum risk reward is 5R, 1 5, 1 5 risk reward, 1 5R. 1R, I mean the risk is 1R is $25. Okay, it's $25. And your targets 5R, you're going to multiply your risk by 5. Follow carefully. You're going to multiply your risk by 5. And 25 multiple by 5, this is $125. $125. Okay? So account 5,000. Minimum risk reward 1 5. Like if I have a trade on which I can't get like 1 5 risk reward, I'm not taking that trade. I just ignore it because in a week, my weekly target, my monthly target is 14. My weekly target is 10. Okay. Not my, but I'm just giving you an example of a 5K account. 14 is 1,000. Okay. 10 in a week. If your risk is 25, 10 multiple by 25, you have $250. In a week, okay? And if you make 10 in a week, if your aim is to make 10 in a week, in a month, you'll make 5,000 on a 5K account. Now let me show you that it's way possible and it's a realistic target. And you don't even need to take like more than 3 trades in a day. This is 1 week. And let's backtest all the trades that happened in this week right here. So now as I'm waiting for price to tap into this demand zone, I'll maybe anticipate maybe a pullback trade, right? So let me go on the 15-minute time frame. All right, I am on the 15-minute time frame, and let me refine my zone. Like if price reach here, but you see that I don't have imbalance because I'm not going to spend everything here, but I look at imbalance. I don't have imbalance right here, so there's no way I'm going to refine my zone right here. because price won't come there. So here, um, here market is market not this is not broker structure. This is liquidity. Market is coming to fill the imbalance created here and tap into this other block. And you have this other block right here that broke structure. So if I take this trade right here, what would be my target? This zone, not here. Now let me draw this supply zone. On this is on Tuesday, okay? Um, this is on Monday. This is on Tuesday, okay? Tuesday, I didn't have a setup on Tuesday because honestly, I didn't have a setup on Tuesday because um this is my supply zone and price didn't reach my supply zone and I'm okay with it. Like I missed this trade on Tuesday, I'm okay with it. Like I didn't have a trade on Tuesday, on Monday, I'm okay. Price came here and this other block didn't break structure here. So I'm not taking this, right? I'm not taking this. I'm not taking this as a trade. It's not a valid supply zone for me. But now you see this, there was a news release. Price went down here, tap into my demand zone, but during Asian sessions. And I'm sleeping. This is Asian sessions, no stress for me. Now I have this breakout structure and have this beautiful imbalance that is created. Okay, this imbalance right here, this big candle right here, price has to fill this imbalance. And what is the other block that is above that is below above this imbalance? So now let me switch on the my entry time frame is the 3 minute and the 1 minute. So let me switch on. Okay, we all are, we all agree that uptrend is higher highs, higher low in textbook, right? Now, when price reach into a supply zone, I just wait for the recent demand to be disrespected. Then, before market return back, they'll just give you setup, like create some liquidities. Okay, create some liquidities. Then the other block that caused that breakout structure, I'll set my limit orders there and put my SL slightly above it, and then I'll target my demand zone right here. Same pair. This is the same pair. I didn't have setup on Monday, Tuesday. This is Wednesday. Okay, Wednesday. Now market was in a clear uptrend and there is no need to trade that. I'm not trading these zones. I'm not like I want high probability trades. So I'm not trading that higher highs, higher lows. Higher highs, higher lows. So I'm not taking this drop. Market on this, like break it above. So uptrend still in. I mean buyers still in. Now market broke this structure. But by breaking this structure, it created other block right here. And I know that this is nothing but liquidity. And I have imbalance right here. Look, I have imbalance right here. This area and this area. If I have a candle right here and market create this another candle right here. If the wick of this candle, right? Let's say that market create another candle right here. Okay? Market create like and fill this imbalance, tap in the other block above it, and price will go down. So no, whatever I'm going to see here, I'm not going to take it, right? I'm not going to take that. So price came here, broke this structure, created liquidity right here. Now I'll just always say I'm a conservative trader. Like I'm not trying to have to be, because sometimes market will just kick you before going. I'm not going to set my pips because I've been victim of this. Where I'm trying to be conservative, maybe 2 pips above it, and I'm targeting. I just look at this area, and I have this fair value gap right here, and price is actually likely to come to fill this fair value gap right here. So I'll target. Okay, I'll target this fair value gap right. Okay. Now price came to fill the fair value gap. News release, bang, price rally up. So this is 110 risk reward. Monday I didn't have a trade. I'm okay with it. Tuesday I didn't have a trade. I was okay with it. Wednesday I have a trade. This is 110 risk reward. And when I have a 110 risk reward, the risk is 20. Let's say that you have a 5K account and the risk is $25. Like this is 0.50% of it. And 25 multiple by 10, this is $250. Weekly target smash on that 5K account. Here you have. All right. So 110 risk reward. Let's say that this is $250 on Wednesday. Okay. If I make this kind of risk reward, I'm not trading anymore. Okay, I'm not trading anymore for the day. So market did this and rally up. Okay, now I'll return back on my structure time frame. Let's say 15-minute time frame. And when there is news like this, these news create um, these news create setups, because when price rallies up like this, there is this imbalance that market causes right here. So they'll push price back to fill these orders, that like the massive buys they put right here to fill these orders. But sometimes market will not just come straight, because you see here you have some resistance right here. So if you buy here, you're being greedy and you're not taking profit. It came to 100 SL, they fill the gap and market rally up. So I know that this is nothing but liquidity created right here. So I'll draw my zone and try to anticipate a pullback. Okay, and try to anticipate a pullback like I anticipated right here before price tap into my demon zone. So here, so I'm see here the trading this is the distribution during Asian sessions. Asian sessions price doesn't move. This is why I don't trade it. So Asian sessions price did this and push down, break structure right here. And I see other block right here, and I see other block right here. When I have multiple other blocks like this, what do? I go on my 1 minute time frame or 3 minute time frame, and I try to look for entry, confirmation entry. So now, this is Wednesday. I had the setup, and I was okay with it. On Thursday, Let me go on the 1 minute and let's see what happened there. All right. Price is in clear uptrend, and there's no way I'm gonna sell it. I don't sell dip bottom or dip tops. I don't sell that. Okay. Higher highs. Excuse me. Higher highs. High lows. Higher highs. High lows. Higher highs. High lows. No, price failed to make a new higher high, meaning sellers are there. Price break this low structure, broke this low structure. Now I wait for price to return back to the other block that goes that block structure and sell. So I set my limit order um at the open of this blue candle, the last blue candle before the down move. This is the other block. I'll put my sell limit. This is it. Again, I'm a conservative trader. I'm not trying to be aggressive with my entry. I'll just put my SL slightly above it, like the first trade, because sometimes market can do this before dropping. So if you are too aggressive, you might take steady losses like this. I'm not trying to do that. And where will I target? I'll just target next demand zone. Okay, I'll target next demand zone. Now I want you to play out. Okay, market broke this low, created this other block here. Once it's create this other block and market came back and dropped here, it's not breaking this low right here. After market broke this low right here, I'm just moving my SL right here. And now secure maybe one risk reward right here. Like I'm not, after even breaking this lows, I move my SL to my entry point. Move my SL to my entry point as we broken this structure right here. Now, after market broke this structure right here, move my SL right here. Then market came here and it has not broken this structure yet. Now broke this structure, made a new lower low. So the other block that once it's disrespected, market will just change trend is this other block. So I'll move my SL down right here and watch it play out. And market just hit my SL. I'm being realistic, and I got out with 2.67. 2.67 risk reward. Your risk is $25. So you multiply this risk reward by 25. Okay. 2.67 multiplied by 25. This is 66. Okay. $66. $66 on Thursday. I'm not trading anymore. I get out. Like I'm just going to do something else. Now this zone right here calls this break structure, and some people are trying to like trade this demand zone, trade, and you're overwhelmed. Right? If you want to do that, make sure you're a professional like Sir Briley. Otherwise, you're gonna burn your finger multiple times. I'm just trying to take high probability zones because I'm a beginner. Okay, so I take only high probability zones. Now price tap, as I said, I'm not trading Asian sessions because most of the time price will take liquidity below Asian sessions and above Asian sessions. I just trade London sessions and New York sessions. Asian sessions right here, London sessions rise, run price above Asian sessions high, took liquidity right here, run down London sessions. I'm not taking it yet. I see this as liquidity and I wait for price right here. Price eventually got here on Friday. Okay, so now let's go on the on our entry time frame, like 1 minute, to see what happened there. Okay, now if you see this down move right here, up move right here, this is what you're gonna see on what? On the 15 minute, right? You do agree with me? On the 15 minute, you see just one down move down and one up, one rally up. But what you don't know and you're not aware is that, okay, is that the higher time frame, the smaller time frame execute the smaller time frame execute the higher time frame. So if price is likely to reverse on the higher time frame, the smaller time frame is always going to tell you that. So price right here was in a clear downtrend. Okay, lower low, lower high. Bang, beautiful imbalance created. Price created these liquidities. You know, fill imbalance, tap into that other block. But I'm not trading that. I'm not trading that. I'm not trying to have 5 trades in a day. I just aim at 5 trades in a week, or 2 trades in a day, or just one good setup in a day in a big zones, and I'm done. So price broke structure. Price kept making higher lows, lower highs and lower lows. Some rushing right here, the buy, they got kicked out. Okay, now price created a new lower high, and you have this supply zone right here. Price failed to create a new lower low. That means they're protecting this low. Now price flip this supply zone. I'll just draw my demand zone that caused this break of structure and set my limit order there, because market is the smaller time frame is telling me that, okay, 15 minute wants to reverse, so you need to take a trade. But this, I communicate with multiple time frames. I restructure on multiple time frames because I know here that I know where this trend is going to end. This is why I said restructure in its globality. Don't stay on a 1 minute and try to take trade. Try to restructure on higher time frames, so you know where the 1 minute this trend is going to end. I know that probably, because it's all about probability, this 1 minute trend is going to end here. So when I have all my confluences here, now I can take my trades. As price has flipped this demand zones, failed to create a new lower low, beautiful double bottom, and beautiful order block created right here. I have multiple confluences, and I'm just going to take this trade. Once market flip this supply zone right here, the supply zone is no more respected. I'll look for the demand zone that caused that break of structure, or what you call short. I just want you to understand the principle. Before price tap into my demand zone, I just set my limit order. And I'm being conservative, putting my SL right here, and I'll come back on the 15-minute time frame. And as a day trader, how to set my target. I know that I have this drop, base drop, and if I target right here, price is likely not to hit my target the same day. So I'll target this supply zone right here. Okay, this supply zone right here, and this is 1/6 risk reward, meaning you're risking 1 to get 6. This is 1/6, 1, 1/6, Okay, and you're gonna multiple your risk on 5,000. If you have a $50 risk on a $10,000, you can calculate your risk based on that. If you have a 100K, you can calculate your risk based on that. So let's say 6.33 multiple over 25. This is 158. All right, 100, 100, $158. So if you do the calculation, if you make 158 plus $66 plus $250, this is 400. This is 400, $474 in just 1 week. One pair, only 2 sessions, London and New York, not Asian, because Asian is at night. And you don't want to be the slave, or you don't want to be slave to the market, like trying to trade every single hour, every fucking day, every fucking pair, every fucking set that people are sending. You focus on your 1 to 2 or 3 pairs. You aim at 5 setups. Like this is just free trades, right? Free trades in a fucking week on one single pair, high probability ones, and you did what? $474. If you do that in if you do that, let's say you make like $400 in 1 week. In a month, like in 4 weeks, you're gonna make 1,600 in a month. So let's be realistic. Let's say that you took 8 trades, right? 8 trades. 8 trades, 5 losses. Free winning, excuse me. Okay? 5 losses. For every loss, you lose only $25 because I don't use a fixed lot size. I just calculate my lot size according to my stop loss. If I have a free pick stop loss, I use my lot size according to that pick stop loss. If I have a 10 pick stop loss, I use my lot size so that I can risk the percentage of my account I want to risk. So for every fucking trade, I'm just going to lose the same amount of money. So let's say that you have 5 losses. For every loss, let's say that you risk 25. So if you multiple 25 by 5, you get 125. And if you make 3 winning trades, all your winning trades, you have here 110 risk reward. Here you had 1-2. Here you have 1-6. But your minimum is 1-5. But here it was more than 1-5, but unfortunately you got kicked out at break even. So if you do respect that plan and you have 5 losses, this is only 125, and all your winnings are 474. If you do 474 minus 125, 474 minus 125, you get 300. Okay, 349. Okay, now you're going to keep making analysis on 20 pairs, keep taking multiple trades, and most of them will be losses because emotions comes in when you judge the result. Like when you are skeptical about the result of what may happen, like if I take this trade, will it be the winning one or a lost one? Okay, but you're not going to judge your performance based on a day-by-day basis, like day-by-day trade. No, on a series of, you're going to now evaluate yourself and call yourself a trader because you know in the long run you will be profitable. This guy it takes a lot of discipline to stick to one pair because choose on Monday no trade, Tuesday no trade, and you see everybody smashing TP taking $10,000, $2,000, $3,000, making profit, and you think like you're dumb. You're not dumb. You are just indisciplined, and you are not focused on yourself. You're not focused on yourself. Focus on less pairs. Focus on less sessions. Focus on less trade, and you will see that you have high probability setups, and you have less losses, and you will make more profit. Okay, you make more profit. It's not about technical analysis. It's about money management and emotional management. Because let's say that you have four losses in a row, four losses in a row, or three losses in a row. Please turn on your mic. Turn off your mic, please. Let's say that you have three losses in a row. You will not be emotional to take a trade because you know that only one fucking trade like this can cover up all your losses. But people are just going to keep taking trades and you're not being professional. One should learn to be disciplined and you make a lot of money. Now you can buy big accounts and even though you want, even if you want, you might not respect these principles. But as a newbie, put yourself in an environment that will make you emotionless. And you just can't be emotionless because people are saying, don't be scared, don't be scared, don't be scared. It doesn't work like that. It doesn't work because as soon as you just click on buy or sell, this is when the inner struggle starts because nobody is there to help you. Nobody's there to help you. Trading is money management and emotional money management. This is what is going to help you. And even though you have, even when you have a very good risk reward, think in terms of risk reward, not money. When you have a good risk reward, you will barely not be profitable. I promise you. I promise you. All right. So thank you very much. And I thank Boss Frank and Sir Bradley for giving me the time to do this. I'm just done. Thank you. If you have any questions, you can ask. And
Thanks, boss.
this seems like overwhelming. Oh, what this guy is doing? I don't. Yeah, it seems overwhelming. But trading is a job, and treat it as such. Be professional. Journal every fucking trade. Study them. What happened? How the entry plays out. Let's say that here you took a loss. Okay, let's say that here you took a loss on the 3 minute trying to trade these supply zones and price kick you. Or just you put your SL slightly at the same line of the zone market kicks you before going. All these mistakes you should learn from them and try to avoid them next time. But you take 10 trades in a day. How come are you going to have the courage to journal them? You can't. So you take trade, you don't even learn from your mistakes, you don't even try to better yourself, and you try to move on like this. Do you have any question? All right, so I consider that I think nobody has questions. So, Boss Frank.
Yo, I'm here.
Thank you. I'm done.
All right. Thank you so much, Enoch. Thank you. I really appreciate. Okay, so this is where we'll be wrapping up for today. I believe we've learned so much from Boss Braley and Boss Enoch. I don't have any other thing to say. The only thing I have to say is that number one, your psychology to become a profitable trader, psychology is what will make you profitable, not necessarily your skill. All right, the day you overcome your fear of entering your trades, most people I know what have been holding them to become profitable is that they are scared. All right, they are scared of the trades and everything. So once you master psychology, you'll be good, right? And your risk management, a lot of people, I don't know, they make but it's normal, right? It's normal when you're coming up, it's okay. But stick to some certain rules of risk management. Stick to some rules and don't violate it no matter what, right? No matter what. You're risking certain amount to make certain amount. Don't enter any trade blindly. Never enter a trade that your SL is bigger than your TP. Alright? And always stick to that. If you are risking $100, make sure you are making at least $300. Alright? So no matter what, don't shift your SL or leave it to go trade. You say it must reverse. I don't know. Stick to a certain risk management model so that you can be preserving your money. All right. The goal is to keep growing. It's not you be going back and forth, back and forth, back and forth. All right. So have a certain risk management rule that you follow. Okay. Maybe you have a particular SL limit. Once you hit this for the day, stay off the market. All right. You can hear a lot of us saying that you don't really need to trade every day. Don't become a slave to the chart, right? You are not born to be looking at the chart all your life. You have a life to catch. You have a lot of things to do also. So once you reach your daily target, you cannot stay off the chart. All right. If you don't see any setup, don't force your setup. Profitable setups are very obvious. Don't force it. All right. If you look at the setup and it's doing as if it might do, it might not do, leave it. But once it's very obvious, take your trade, all right? Mark out your zone on higher time frames. Wait for it to tap in. Go on a lower time frame and wait for a confirmation, and you'll be good, guys. All right? Trading is not that hard, all right? It's very simple. Once you stick to the rules, you'll be fine. Okay? So this is where we draw the curtain for tonight. Tomorrow morning we go harder. Someone posted on the group that there's an 80-year-old boy making 300k dollars every week. That's over 150 million. Guys, the kind of money I've seen in trading, it's crazy. There is no income cap, like there is no limit to how much you can make around here. There is no limit. Like Nigerians make $1 million. Normal Nigeria, they make $1 million every single month trading. And you will know, you think they are Yahoo guys and everything, because man, the kind of money that you see, and forex traders, they have this lifestyle they live like G guys, alright? So there is no income cap to this trading of a thing, alright? When I was doing affiliate marketing, my income around there was 500k to 1M every month. But in trading, it's hitting like 1M daily. All right, so it's see that it's crazy over here. So you just learn. I need to learn this skill, and it's something that you can do with just you and your chat. You're not talking to anybody. You don't give a fuck about anybody. You can just stay in your room and be making money. You can be making money and be building house, and nobody will know. All right. So it's a skill that if once you commit yourself to, you forever be grateful that you did. It will be worth it at the end. It will pay you and pay you and pay you and pay you, and until, because it's something you can do anywhere, anytime, it's mad. One of my friend caught a trade today. He want to flip his 1k to 10k, from 10k to 100k, and he just caught one normal trade, $100. That's $100 turned to $700. This kind of skills that allows you print money on demand. Like you just print money out of thin air because of what you know. And in the triangle of wealth, the first step is learning a high income skill. You have to turn yourself into a cash breathing machine. You have to make sure that you have skill sets that can generate you money. Like you can use yourself and generate money, all right? So that's the skill set is the first. Then after the second model, the second triangle there is a profitable business. So once you are done with the skill set, you can open a profitable business, all right? Because business is crash. You can lose everything, but you cannot lose your skill set. That's why the first step to wealth is having some set of skill sets, all right? That even if you lose everything, you can still bounce up back because you have some skill set, all right? And the third one is profitable investment. Most traders, the major thing there that investing and usually real estate. That's why you know they have a lot of houses and they buy a lot of cars. All right, so usually real estate and everything because it's very important that you invest your money. All right, most of us don't even have strength for physical businesses. I'm not even sure I'll open a physical business. It can be just transport, but majorly I'm gonna be investing heavily into real estate, and that is it. So that is it for tonight, guys. Thank you so much for coming up tonight. Do have a great night, everybody.